Hello ladies and gentlemen, Greg Michalowski from ForexLive.com. This is a Kickstart video where I take a look at the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. Today's date is January 8th, 2024. Let's get started. Let's start by taking a look at the euro versus US dollar. And as you can see, the price action off this hourly chart was largely up and down, up and down, up and down. The falling 100-hour moving average, just a blue line in this chart, was as a result abused, if you will, with the price breaking above and failing and moving below and failing and coming back above. And well, we're back above now. That level comes in at 1.0939. If the price can stay above that, that would be more bullish. We have a narrow trading range. We just did make a new high for the trading day, so buyers are trying to make a play. But you can say that we had a lower move here, and that failed too. So we got to be careful. And even so, that moved to the downside, which should have ignited more downside momentum because it fell below the 50% midpoint of the move up from the December low to the December high. Lows back here, but the high right here, that 50% came in at 1.0931, and as you can see, the price fell below that level. It also fell below this swing area. Just blur your eyes a little bit, and you can see how this was a ceiling through here, and then it became a floor through here, and then we formed more of a ceiling through here, and then a floor through here, and a ceiling through here, and now a floor through here earlier today. Broke below that level. Should have gone lower, didn't. Market moved higher, so it's now the buyer's turn to try to make a play. We'll see if they can take that cue and start to move back toward the 38.2% retracement of 1.0918. We might also look toward these highs right through here, somewhere in between those. The current level, or the current level around the high of 1.0959 up to 1.0980. We'll see, but slow Monday for the euro versus US dollar so far. Taking a look at the dollar versus yen next. This is the hourly chart here, and this currency pair started at the highs for the day, and then rotated back to the downside. We did come down to a swing area that I had earmarked here in most recent videos and commentary. As the level corresponds with different swing highs through here that led to this decline down here. Came back, and in trading last week, we moved above that area and then found support against it. Admittedly, we did move below it here, but then reestablished support against it here. And in trading here today, the market was true to form and did find support buyers against that level. Maybe they listened to my videos. On the top side, the 38.2% retracement has done a a good job in the most recent trading, holding resistance against that 144.698. So with the narrow trading range and support being against the 143.93 to 144.09 level, just around the 144 level, and resistance at 144.70. Traders will be looking for a break either to the upside right through here, or to the downside below this swing area. I'll also have to get below the 100-hour moving average if we're going to go lower in this pair. That level comes in at 143.71 and is moving up toward that swing area right through here. So maybe it catches up to that level and provides a double reason to buy the dip. We will see, but the battle is on to start the trading week. But the price action is up and down so far in trading today. Let's finally take a look at the sterling versus the US dollar. That again on the hourly chart, and what sticks out to me here in the price action today is the holding of the 100-hour moving average. Admittedly, last week the price moved above and below it here. It kind of did a mess of it in Thursday and Friday's trade. But then we had the employment data, and we surged through that level, forcing our way all the way up to the high price that we saw in not last week's trade, but the week before, and we found resistance sellers against that level. Trading here today, the market traded above and below the 200-hour moving average, again making sloppiness out of the technicals that I like to look at, and frustrating you perhaps as well. But when the price did fall down to the 100-hour moving average, we did find those support buyers against that level, which was encouraging, and we've seen a rotation back to the upside. That rotation has taken the price up to this swing area, which admittedly was also more solid through here. Got sloppy through here, but and here especially, but and here even more so. So I'm not necessarily in love with this area right here, But if we do get above it, we'll give the buyers the benefit of the doubt and have traders looking toward the 127.72 level, which again was the high price from Friday's trade and the high price from, let me see, Friday, 30, Wednesday, Tuesday, I guess Monday last week. So there were two highs last week near the 127.72 level. Anyway, buyers are trying to make a play, holding support against 100-hour moving average in that currency pair today. So there you go, a quick look at some of the major currency pairs to get your trading started for the current week. No real economic data. We do have Bostic speaking at 12 p.m. and have consumer credit at 3 p.m., but that's not a big mover this week. The big event will be the CPI, which comes out on Thursday. The month-to-month and the core headline, and the core is expected to rise by 0.2%, but the year-on-year is expected to rise to 3.2% from 3.1%. That's because a year ago, the month-to-month number came in at minus 0.1%. So it's tough to beat that one with and see that year-on-year number come down. But the next 2 months, there's a plus 0.5 and a plus 0.4. So that's when we see a big move down in the CPI to start the new trading year. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.